Hi guys, so here Anwari here, co-founder of Sublime Trading, here with a short video analysis on the indices. Now on Friday we saw some quite significant bearish moves and the new variant, the COVID variant, is being blamed. We want to have a more objective view looking purely at price action and support and resistance levels. Let the technicals guide us and not get caught up in the noise surrounding the markets at the moment. So we'll start with the S&P 500. Now this chart that we're using, this is called the Trend Strength Analyzer page, and these tools are available in the Launchpad Investor Starter Kit. So if you haven't completed the scorecard, I will link it to below this video. Complete the scorecard and you'll get access to these tools, which are part of the Launchpad Investor Starter Kit. So let's start with the S&P 500. If you look at the S&P 500, price has been bullish since 2009. This move here, this bearish move to the downside, which is around 35%, this was due to COVID-19. Since then, we've had a clean move to the upside. In fact, if I just get my marker, you can see that the move to the upside to the peak of November this month is 115% recovery. Currently, we're looking at around 108, 109% to the upside. So overall, it's very much a bullish market, and that's the direction you want to be going in. Even the bearish moves of Friday are very insignificant in terms of the overall direction of the market, and that in itself is a reason not to panic just as yet. On the weekly, price above the 200 and the 50 simple moving averages. We have a nice trend in play. The trend filter is predominantly green. It does turn grey on occasions during pullbacks, which is fine. It's perfectly acceptable. Now, there is a logic to why the trend filter is turning green and grey and why there are periods of red as well. In fact, let me just open up the weekly time frame. You can see that we have a nice clean trend, which is made up of green and grey bars. Then the correction around COVID-19, the trend filter turned red. And then since then, it's been a little bit of grey here during the recovery phase. But since then, it's been predominantly green with bits of grey during these pullback periods. The logic is explained in the video. If you come down to the daily time frame now, if you look at Friday's move, it's a bearish move to the downside, tiny in comparison to the overall trend. Now, if you look at the trend, there's been numerous times where the trend filter has turned red for 1 or 2 bars, maybe 3 or 4 bars here and here. But overall, the strength of the market has always been bullish. Now, there were a few more red bars here, but we expect that seasonal movement to the downside, that seasonal correction around September, October. We had explained this numerous times in the past. In fact, if I compress the charts, you can see that back here as well. September, there was a correction, created a double bottom formation before this move to the upside. So again, this was September of last year. September of this year, we saw something similar with a move to the upside. Now, if you look at this in a little bit more detail, if I just get my support and resistance tool, and if I just mark this level here, generally what tends to happen is that when price breaks through a key area of resistance, we want to see ideally some kind of support. Price shot ahead without retesting this level. So from a technical perspective, having a purely objective approach to this, forgetting all the noise, forgetting getting caught up in what the markets are what the news is telling you, what we're seeing here is simply a retest of this level. After every move through a level of resistance, price likes to retest it as support. If this level is broken, then price will come down to the 200 simple moving average. We need to be a little bit more concerned, particularly if the 200 moving average is broken, then we could see further weakness. For now, all we're seeing is a pullback to this area of support. Ideally, we want to see this area, including the 50 simple moving average, hold strong as a support zone and then a bounce back off it, and ideally a break and close above the high of November, and then a continuation towards that 5,000 round number. So that is what we are seeing on the S&P 500 for now. Now, of course, the S&P 500 is the leading indicator, so the Nasdaq and the Dow will follow accordingly. So let's just catch up on what's happening on the Nasdaq, starting with the monthly time frame. Again, overall, very, very bullish looking chart. Indecision candle so far this month, but we've seen indecision candles numerous times in the trend only for it to continue to the upside. On the weekly, price above the 200 moving average, the trend filter is green, and on the daily, price above the 200 and the 50 simple moving averages, the trend filter is currently grey with this pullback. Again, if I just get my support and resistance tool and just mark this level, and then also mark this level here. What we have is a support zone directly below price, and price is likely to find some kind of support between these levels, including the 50 simple moving average, and then bounce back to the upside. Of course, there's no guarantee. We're playing on probabilities, and as the overall trend is bullish, that is the direction we want to be going in. There's always these pullback periods that happen. This is part and parcel of the market. This is where people always panic, and that's usually because they're very out of tune with the natural movement of the market. This is very much a normal pullback in an overall bullish trend. If these support levels are broken, then we could see price come back to the 200 moving average. Then we need to be a little bit more concerned. But for now, we just need to apply a bit of patience. The Dow Jones always tends to be the one that's lagging behind. If I just open up the monthly time frame, we can see that November's candle is looking far more bearish than the S&P and the Nasdaq. But overall, though, this is still a bullish looking trend. On the weekly, if I open that up, price above the 200 moving average. Trend filter is grey as can be expected, but it is going through a bit of a messy period here. Grey bars here, back to grey bars here. Overall, though, price is moving to the upside. So we want to see a breakout and a continuation of the bullish trend. And on the daily, we can see a gap down through the 50 simple, well, gap down, and then price closed below the 50 simple moving average. Trend filter turned red, a deeper red compared to these other reds. Again, there's a logic to why there's darker reds and lighter reds, all explained in the video syllabus that comes with the Launchpad Academy. But price, importantly, is still holding above the 200 simple moving average. What we want to see is price find some kind of support, and then a correction, and then a breakout to the upside. We want to see this gap filled, and then a continuation of the bullish trend. So overall, though, the indices are very, very much bullish. There is no reason to panic. There's no reason to get caught up with the noise around the COVID variants. We've heard that many times since last year, new variants coming out. This has all now been absorbed into the market. There will be bumpy rides along the way, but this is really where that mental strength as an investor comes in. Moving to the Ftse now. Ftse is a very, very messy looking chart, and in fact the Ftse 100 is not a chart that features strongly in our analysis. The S&P 500 guides us. We are predominantly US stock heavy in our portfolio, but remember, guys, when the US stock market is in a bull run, UK tends to follow, and so we then pick out the very best looking UK stocks and add that into the portfolio. Overall, the Ftse 100 has just been a very messy looking chart. It's just been in this huge consolidation. If you look at November now, again, bearish looking candle, but price really has been working its way to the upside. So the fact that we are seeing one single red candlestick is nothing to be too concerned about. On the weekly, price remains above the 200 and the 50 simple moving averages. The trend filter is grey. You can see it's gone through this consolidation. It's holding above that 7,000 round number. As long as price holds above 7,000, we're likely to see strength to the upside. And on the daily, this is that bearish move from Friday. Price closed just above the 200 simple moving average. We've been here before, where price came to the 200 simple moving average and then bounced off it. So we want to see something similar. If it breaks through it, well, there is a 7,000 round number directly below the 200 moving average. So there is a support zone. If it breaks through that, then there is another support zone here, which is made up of all these PIV levels, including this level back here. So there are a number of support levels. If it breaks through this consolidation, then we have a little bit more to be concerned about. But for now, this is nothing more than a pullback in an overall bull trend. So that's the analysis, guys. Do remain calm. If you have any questions, put them below this video and we will get back to you. I'm also going to link the scorecard. Do complete that scorecard and get access to our tools and the Launchpad Investor Starter Kit.